Over the past 2 or 3 days, there has been no significant news about the situation in the energy market, except for routine statements from the European Union on its race to fill gas storage facilities ahead of the winter heating season. Judging by them, Europe is on track to beat targets for filling tanks, which sounds a bit impossible. Nevertheless, this keeps energy prices relatively stable in anticipation of the European Union ban on Russian oil product shipments, which is set to kick in on December. The price of oil is still slightly above $90 per barrel, and most likely the situation will remain unchanged until the meeting of the Federal Open Market Committee to be held this Wednesday. Meanwhile, the growing risk of global recession is exerting additional pressure on the oil quotes. However, the Chinese megacity of Chengdu has exited its 2-week lockdown today. This suggested that oil demand growth in China, the world's largest energy consumer, is likely to recover. According to the trading charts, severe downside momentum seen at the end of the last week dragged Brent crude oil futures down to the level of $90 per barrel. As a result, the volume of short positions decreased and the benchmark pulled back by about 2.5%. At the same time, market sentiment remained bearish. If the price fixes below the 90 mark, at least on the 4-hour chart, the asset will extend losses. As for gold, the situation is somewhat similar to that in the commodity market. However, please bear in mind that gold is much more dependent on the Fed's monetary policy. Thus, the yellow metal's response to this news will be stronger. In the meantime, gold is expected to remain around current levels until the meeting of the Federal Open Market Committee. Gold futures slowed down the downward cycle around the $1,655 mark, where a technical pullback occurred from overbought conditions. To continue its downtrend, the quote needs to stay firm below 1,650. Otherwise, the pullback may turn into a sideways trend. The ruble has been standing still for quite a long time. Of course, the fact that Russia's central bank lowered its key interest rate by 50 basis points to 7.5% from 8% weakened the Russian currency, and this in turn allowed the dollar to advance slightly above 60 rubles. However, this slide in the value of the ruble is temporary. After all, foreign exchange interventions are of great importance to investors rather than the central bank's monetary policy. If the Minister of Finance reveals at least minor details about the upcoming interventions in the near future, the US dollar will fall below 60 rubles. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.